right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to go through the CPI data that came out this morning before the market opened. This is a critically important number. I want to talk about what it means to us as individuals, to us as investors, and most importantly, I want to talk about what this means to the Fed, because really, from an investment standpoint, that's what this is all about. So if you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, I would appreciate that. And lastly, if you want to become a member, you can join the channel by hitting the join button on the YouTube page. It should be right next to the subscribe button. If you don't see the join button, there is a link below. Members get some members-only content. We do a once-a-week members-only live stream. And also on that live stream, members pick a company for me to do a deep dive video on each week. So we have a lot of fun there. I think it's a good value. We'd love to have you join us. Let's get into CPI. Okay, so the first thing I want to show you, here's just a headline. This is the Yahoo headline, and all the headlines are going to be fairly similar. Consumer prices fall 0.1% in December as inflation cools for the sixth straight month. So we're going to look at a chart of that month by month by month. So that is obviously a very good trend. The market does not know what to do with this number. I'm going to go through some charts later. We have been up and down and up and down. As I'm recording this, we're only a couple hours into trading, and we have been all over the place from pre-market to the market. The market can't make up its mind. And when we dig in the numbers, I think you're going to see why. So at the moment that I'm recording this right now, the S&P is down 0.15, the Dow is up 0.26, the NASDAQ is down 0.39, and the Russell is up 0.46. I will tell you, by the time you're watching this, it's likely those numbers will be very different because they have been swinging all morning up and down and up and down. Okay, so here's a history chart including today's report. So you're going to see inflation peaked in June of 2022 at 9.1%. So that was the worst month. That was the top, if you will. Each month since then, the CPI number has gone down, the top line number. We're going to dig into the detail numbers because, you know, there were ups and downs across the board. But the top line number continues to decrease. So 2 months ago, it was 7.7. Last month, we had a beat. It was at 7.1, so we beat expectations. This month, as you can see, the consensus expectation was 6.5%, and you can see we came in at 6.5%. So this was right on target. And I'm not sure, I think that's a little bit of what's confusing the market. A lot of people thought and were expecting that we were going to really beat this number. So despite the fact that we came in on target, for some people, they're viewing this as bad news. Also, some of the line items are not as great of news as you would want. I do think had we missed this to the upside, in other words, if this was higher than 6.5, particularly if it was higher than 6.7, I think this would have been a very, very big down day. So we did avoid that, but a lot of people were very optimistic about today, and it may still turn out that way. The market is still digesting this information. But if we look at this, the expectation was 6.5, the actual was 6.5, and more importantly, that's a decrease from month over month. Last month it was 7.1, this month is 6.5. So this trend continues to move in the right direction. And remember, what the Fed wants is for this to ultimately get back down in the twos. That's what they consider natural CPI inflation. So while we're not there yet, it appears we seem to be building momentum in the right direction. Let's look at the actual data itself, because there were a few things there that I think might be a little bit misleading. Okay, so the two columns that are important here that I'm gonna look at, and this is the summary report. December 2022, but more importantly, unadjusted 12 months ended December 2022, so 6.5. Remember, that's the number we just looked at, and that's all items. So 6.5 is what we were expecting, 6.5 is what we got. So that was down 0.1% adjusted seasonally month over month. And that is also what we were expecting. So this was a direct hit and a direct hit. There's 3 or 4 line items that I think are super important on here. So I want to go through them. Food was up in December 0.3. So that is still actually moving up. Food has been very difficult. That, you know, you can live with almost everything else on this list. You can't live without food, especially food at home, right? Food away from home, you know, eating out, that's a different story. But we all need food to sustain life, and it still continues to increase. So that's the bad news. The good news is it's slowing down. You'll see back in July, this was at 1.1. It went to 0.8, 0.8, and then 0.6 in October, 0.5 in November, and 0.3 in December. So that seems to be trending in the right direction. We really would like to see a negative number here because really, food is a big deal. Okay, then we go to energy. So energy overall was down 4.5%. So this is really one of the things that helped achieve this lower number. So this is good news, bad news, because we don't know if this is a temporary downturn. Particularly oil has gone up a little bit. It's a little bit worse in January than it was in December. And again, these are the December numbers. So we did have a dip in December, and that is helping these numbers, but we don't know if that's sustainable or not. We're going to look at core CPI, which takes fuel out of the equation. The line fuel oil, that was down 16.6%. That is a monstrous move down. Now, 2 months ago, it was up 19.8%. So you can see how this can affect the report in a major way. These are big fluctuations. So this month, this was in our favor big time. The overall energy number was down 4.5. That was the best number on the board. This helped us, but I think the market is a little concerned as to whether or not this is the area we really wanted to see. Obviously, we want to see fuel prices go down, but we don't know the stability of that. I think we want to see some of these other categories start to move down in the right direction. Commodities, less food and energy, was up 0.3, so that left the 12-month unadjusted at 5.7. So there's your core inflation, and that was just right on target as well. So we basically hit every number this month, right exactly as we were expecting them. But I do think all this was already built into the market action, and that's why the market's having trouble digesting this today. I think the market knew exactly what to do if we missed this number. It knew exactly what to do if we beat this number. It's having a hard time figuring out what to do when we actually just hit the target right on target. Now they got to do a deeper dive into this data and see what went up, what went down, what do we expect to happen next month? And most importantly, the end result of all of this is the market's trying to figure out, how does the Fed interpret this report? Because really, obviously, inflation affects us as consumers, but as investors, the real ramification in here is, what is the Fed going to look at when it sees this report? How is this going to affect the February 1st Fed meeting when they go to raise interest rates? So obviously the debate has been between 0.25 and 0.5. A 0.25 rate increase was built in about 75% into the market, so that was pretty high. I'm going to go look at the update this morning. So with this new information, if you look at this now, the market now has built 93% chance of a 25% rate hike. And that's versus a 50% rate hike. So nobody's really talking about zero. Nobody's talking about anything higher than 50. And even 50 is now down under 7%. If we look at the bottom here, we'll see the comparison from 1 month ago. You're going to see a 0.25 rate increase was only at 35%. People were more focused on a 50 basis point rate hike at 51%, and there was still about 14% of the people that thought maybe a 75 basis point hike. To this extent, the market has priced 0.25 in. I'm not 100% sure that's what's going to happen. It seems like they're indicating that. It seems like what they want to do is maybe 2 or 3 more rate hikes. People are starting to think now it's only going to be 2. I hear some people talking about thinking it's only going to be 1 more rate hike. So I think that is premature. The Fed just spoke a few days ago, and basically the takeaway was they said, we're going to have to do some things that you don't want us to do and that you're not going to like. So I think the chances that they're backing off of their plan are slim. I think that this 0.25 is a certainty at least. I do think 0.5 is still on the table. We've got 3 more weeks really until that meeting occurs. So depending on what happens between now and then, I do think they could end up doing a 0.5 rate hike. I think they would much prefer the slow and steady, which would be 2 or 3 0.25 rate hikes. So that's what the market is absolutely convinced of at this point. That's what it has built in. So here's the thing. We got to watch out on February 1st. If that comes in at 0.5, that could mean a big downturn in the market. So the question is, what's going to happen in the middle? So this is the SPY on the 5-minute time frame. So I'm super zoomed in here, and there's a reason. I want to show you the market really has been all over the place trying to figure out what this number means. So you can see right here, this giant red candle, that was when the market opened. So markets opened in the US 1 hour after this number came out. So you can see even in the first 5 minutes, we were all over the place. We went from way up to down, and you can see this is a giant zigzag. We took a big move down, and then we moved right back up, and then we took another move down, and now a smaller move up. And by the time you get here, I'm not sure where this is going to be. This is very ambiguous information here. So the market is still making up its mind. I actually would have expected a little more decisiveness with hitting this 6.5, since it was already, the expectation was a giant move to the downside. I think that hitting this, I thought we would probably pop a little bit on that, but it doesn't really seem to be happening yet. So this is the SPY. If we look at the QQQ, it's the same exact story. This red candle was the 9:30 open here in the United States, and the same exact pattern. We took a big move to the downside, ran all the way back up, and now, we're not sure which way we're going here. Last thing I'm going to do is just take a quick look at Bitcoin, because I know a lot of you that follow the channel, we follow Bitcoin and the Bitcoin miners quite a bit on this channel. So from Bitcoin's perspective, we had a giant move last night, but you can see since that move happened, and it was fairly quickly, this is on the 15-minute time frame, so we had a big move up, about a 3% move up in 2 hours. We were very sideways all the way. Again, we ran up a bunch to start, then we ran down a bunch. It looks like we bottomed out here, and now we're going sideways. So, Bitcoin is also in the same type of a battle. So I think all these assets are trying to decide how to digest today's information. The other thing I want to point out that I think is noteworthy is Shelter. Shelter is a very big piece of this number. Shelter remains stubborn. It was at 0.8. So you're going to see the last 3 months were 0.7, 0.8, 0.6, and now this month's back to 0.8. So that's the last 12 months, that's 7.5% increase. So Shelter's a big part of the deal. I think everybody is hoping and waiting for this number to come down. The expectation, I think, is that this number was going to come down, start to get down to 0, and maybe get negative. But we got no movement here at all. In fact, we got a little bit of movement in the wrong direction on Shelter. So at the moment, that's a little bit of a drag on this number. So I guess to set this up for next month, and it's pretty early to be talking about next month's CPI report, but essentially, my takeaway from this is food is trending in the right direction, right? We've gone from 0.8 in September all the way to December. We were at 0.3. So at some point, we'd like to see that go negative, but food is trending in the right direction. Energy trended way down this month. Month over month, that is a very unpredictable number. And that is why they have core inflation, where they strip food and energy out of that. That was 5.7%. That was right on target. You can see the big move to the downside was in used cars and trucks. So we've been expecting this. We've been getting big moves. This is 4 months in a row. September, this was down 1.1. October, 2.4. November, 2.9. And now December, 2.5%. So that's 8.8% unadjusted over the last 12 months. So used cars are moving in the right direction. Even new cars, even new vehicles this month was down 0.1%. That's actually the first time that's gone into the negative. So we're seeing some of that pressure being relieved. All in all, the bottom line is we were right on target with this report. I think there's a lot of room for improvement next month. There was some categories that are still being a little stubborn. So I do think this gives us a chance for another good reading next month and something lower than 6.5. And if somehow we were to get under 6, I really think that would be a big, big deal. We'll wait and see what the forecast is and what the consensus expectation is, but I think everybody's going to probably be expecting some type of drop down near 6%. So I'll leave you with that note. At the time I'm filming this, the markets are very, very sideways. So again, this may turn out to be that we hit our target on CPI and we're going to go sideways today. But again, it didn't start out sideways. We've had a lot of fluctuation here at the beginning. So we'll see what happens on the day. That's what's going on with CPI. That's what I think it's going to do with the Fed. So I think those are the big takeaways from CPI data this morning. So that's all I've got for you for now on this. So thanks so much for watching. Please remember to subscribe and hit the like button, and remember to join us in the next video. So thanks again for watching.